Hi guys, how are you all doing? How has been your trading? It's been a while I posted. I hope you guys have been killing the market. If you're new to the channel, you're welcome to Tom's Capital. Here we use institutional data and market facts to analyze the market so that we can get as close as possible to the institutional traders. If this is something you like, do well to subscribe to the channel. Welcome to today's video. This video is going to be our first market outlook video where we are going to analyze the market together using the concepts that I've taught on the channel. I hope you guys have watched the videos on the concepts, and if you're here to watch those videos, you definitely have to go and watch them. Make sure you understand the concepts so that when you see me use the concepts, you'll understand what I'm doing. Without wasting much of our time, let's jump right into the analysis. As you all know, we do our analysis based on time and price. So let's start up with time in this video. For the sake of this video, I'll be focusing on the weekly contracts, the intra-week contracts, and the daily contract. This is because we are mostly day traders and short-term traders, so we don't really need too much information about the long term. Let's start the analysis. You know how this goes. We analyze based on time and price. So let's start up with time. The first thing we mark now is the weekly contracts, and today is Monday. That means we have Friday, Thursday, Wednesday. Yeah, and we know Wednesday open marks the beginning of the new weekly contract. This marks the beginning of that weekly contract, and yes, the next weekly contract will end on Tuesday, which is at the close of the market on Tuesday. Yes, that is it. Now that we have our weekly contracts marked, let me zoom in so we can see the 2 weeks together. Yeah, exactly. Now that we have our weekly contracts marked, let's mark the intra-week contracts. That will be Monday open right here. I'm going to change the line to dotted line or dashed so that we can know the difference. The next one is Monday open, which is today. Perfect. And the last one will be Friday close or next Monday open, which is right here. Now we have our contracts marked. The next contract is the daily contract, which has already been marked automatically by the time separator on TradingView. The next thing we are going to mark now, as far as time is concerned, is the economic data release time, the important economic data release times. What we'll do now is to head straight to my FS book so that we can go to the economic calendar and check out the important economic data release for the week. So we click on this week. I already changed my settings on my FX book to only show me euro, pound, and dollar, because these are the two currencies that I trade. I trade euro US dollar and pound US dollars. The economic data we'll be focusing on are the rates and the speeches. Those are the important ones. Others can be neglected as far as I'm concerned. The ones that really affect the market are the rates and the speeches. Don't forget that. Always have that at the back of your mind. So for this week, we have speech right here on Monday the 14th, which is today. ECB speech. That is for euro, and we are going to check the time, which is for 17:15. Mind you, the time right here on my FX book is set to my time, and also the time on my TradingView is also set to my time. So once I mark this exact time right here on my TradingView, it's going to mark the point at which the economic data will be released. The first important one right here is this speech, which is for 17:15 on Monday. Let's go mark that up. Monday 14th today, so we have 17:15. We are on the 1 hour time frame. I'll mark 17, then I'll go into the settings to type in the name of the news. So speech. Yeah, I have Euro speech right here. That's the first news. So let's go and check for the next one. The next one is on Tuesday, and it is unemployment rate for pound. That's the only important news for Tuesday. Unemployment rate, and the time is 8 a.m. Let's go and mark that also. 8 a.m. on Tuesday is right here. 8 a.m. and the news is unemployment rate. So let's type that. Yes, that's the second one for the week. Now let's continue. The next important news is on Wednesday, and that is inflation rate right here. As you can see, there is no other rate or speech right here. So the only one we have is the inflation rate, and it's for 8 o'clock on Wednesday. So let's go mark that up. 8 o'clock on Wednesday, British pound on 8 o'clock on Wednesday. That's right there, and it's inflation rate. Inflation GBP. Let's go back to my FX book. On Thursday, we have CPI. CPI is very important. It's related to inflation, so I'll definitely mark that also. For Euro, CPI by 11 o'clock on Thursday. Very important. Very important. It's inflation rate related. The next one will be for Friday, and as you can see on Friday, there is no important news for that day. We don't have any rate related news, and we also do not have any speeches. Therefore, we are good. That's it for the week as far as economic data release is concerned. So let's go back to our analysis. I think we are done with time analysis right now. So that's everything we need to mark as far as time is concerned. Now that we are done with time analysis, we head straight to price analysis, and the first price we are going to be marking will be our major EBITDA price, which will help us to know our location in the market. So we'll be marking one EBITDA price above current market price, then one EBITDA price below current market price. What is our current market price? The current market price is 1.0342, and our major EBITDA price, as you know it, is based on 1,000 pip range. That means our next major EBITDA price will be 1.0500. Let's mark that. That is our next EBITDA price above current price. The next one we'll mark now is the major EBITDA price below current market price, and that will be 1.0150. 1.0150. Now we have our major EBITDA prices marked. From the previous intra-week contract, we see price broke a major EBITDA price right here, which means from price action perspective, we are very bullish. However, from the data analysis that I did, the institutions are already accumulating sell positions, so we should be very careful if we are taking a buy trade. If we are going to be taking any buy position, it's going to be very short term, because we know the institutions are already accumulating sales. That means we are going to be targeting maybe the next liquidity zone, and then we are out. That is that about the major EBITDA price. The next thing we want to look at now is our contract liquidity. From the last weekly contract, we have this low yet to be taken out. Which is major. Let's make that blue. So we can differentiate the weekly contract liquidities from the intra-week ones. Now the I has been taken out already, which also happens to be those intra-week contract I. Let's also mark that weekly and intra-week. That has been taken out right here. The next one, which is the closest to where price is at the moment, is this intra-week I right here, yet to be taken out. Intra-week I will make that green. Okay, then the low also. We have this low right here. These are liquidity that are yet to be taken based on intra-week contracts. Right now, the next thing we want to mark is the daily contract liquidities. And the only daily contract liquidity that is yet to be marked is the low from Friday trading, which is this one right here. I'll make that gold so that we can easily identify that as our daily contract liquidity. I don't focus much on the daily contract liquidity because they get taken out quite easily and don't really cause any major reversal in the market unless the market is in that direction already. The next thing we are going to be looking at now is our liquidity zones. From the price action that we have presently, from this contract, we add this new ABCD swing from this low starting right here as A, B, C, and D, which makes this level a liquidity zone. So let's mark that with the dollar sign so we know it's a liquidity zone that we are looking out for. Yes, we have that marked. That's our first liquidity zone, and let's continue watching price action. Right here we also have new ABCD swing to the downside. So we have A, B, C, and D, which automatically makes this another liquidity zone to watch out for. As you can see, this liquidity zone that we have right here is also the same liquidity from our previous intra-week contract, which makes it a very important one. Similarly, at the low where we have this liquidity zone, it's also the same level where we have our previous intra-week contract liquidity, which makes this a very important one also. What I expect the market to do now is to push up to run this liquidity right here before we can start heading downwards. So how do I trade that? The momentum from the previous intra-week contract is very strong, and that momentum is what is being slowed down with this liquidity inducement that's happening right now. So the next thing that we expect the market to do is to run this high, as I said earlier. So what we are going to do is to mark the trading sessions right now. So open of the day to the close of the day. So if you are familiar with these lines are becoming quite confusing. Let me just make it a dotted line so that we can easily identify the sessions. Wow, this is great. This green line is marking the London Open, whereas the blue line is marking the New York Open. What I'm expecting the market to do right now is for London session to push price down to clear these lows right here. Let me mark that. I mean, these lows right here need to be cleared. It's not compulsory anyways, but I expect it to be cleared. I expect London to push price down to run these lows right here, like I said earlier, into New York Open. And then in New York Open, I want to see a short-term bullishness to confirm to me that the market is about to continue its up move, or I go into the smaller time frame to see if I'll get one of my 5 ultimate price action reversal patterns so I can use it to enter the market to go bullish to clear this high right here. That is the first thing I'm expecting the market to do for today. If this happens today, at the end of the day, that means we would have successfully created an accumulation range which we can mark just like this, from the high to the low. That's from the highest point of the day to the lowest point of the day, and that will divide the market into two equal halves, which will be, this will be the high price and this will be the low price. And if we are going to be bullish, we definitely want to buy at a low price. On Tuesday, I expect price to come back to the lower part of the accumulation range, where I'll look for reversal pattern on the lower time frames to go long again, probably after a liquidity run inside Monday. Then I'll go long again to target this high. I doubt if Tuesday will be able to clear the high to complete the consecutive liquidity run model, because if that happens, then we would expect price to still run that high on Wednesday, because that high will then become our new intra-week contract liquidity. So what I expect price to do is to probably just come very close to the high, and maybe we'll close the day right there. Then we'll now have this highest point will become our next intra-week contract high, which will be the Monday Tuesday trading contract high. Let's make that green. That's the color we use. So that will be our next intra-week contract high. This will become a liquidity zone, and then we'll now have first liquidity zone taken out. This will become our second liquidity zone that we would expect price to run, so that the sell that was accumulated right here will now come to play. We expect unemployment rate to push this market up. Probably, I'm not saying this is exactly what will happen, but that's what I expect based on what is on the market at the moment. At the end of the trading today, I'll still have to analyze the market to see what the institution did and to see if they are playing in line with exactly what I'm doing. Because if I don't do that, I'll no longer have an idea of what is going on. Then that means I'm back to normal retail trading. But I don't do that. I follow the institution back to back to avoid making silly mistakes. I don't get it right all the time, but most times I am right. So let's recap. On Monday, we expect price London session to push price down, and in New York open, we'll expect reversal pattern on the smaller time frame to go long to clear this liquidity. It is not certain that this liquidity zone will be cleared. Price can get close to it without running it, so that we'll have a liquidity pool instead of a consecutive liquidity zone model. So if that is what happened, then we expect price to come very close to this point. Then on Tuesday, we'll see a retracement back to the lower part of the accumulation range, and then price will push back up to then run the liquidity zone, and we'll have our reversal probably from there. It's not certain. If the institutions decide to start adding buy positions, that means they want price to come to this next EBITDA level, and that is what will definitely play out. There is no way we can guess the market unless we see what the institutions do. We can't predict the market. We have to wait for the institutions to make their move, then we follow them. This is what I'm expecting. Doesn't mean this is what will happen, but most likely this is what I expect the market to do. So on Wednesday, we expect price to probably just run this high, reject it, and then we have our sell-off from there till Friday probably. So let's mark that up. What we expect is price on Wednesday will then run this high to complete our reversal model, reject it. If they continue their sell accumulation inside this range, then we expect price to do exactly what I'm marking out, which is to run the high to complete our consecutive liquidity run model. Then we get a rejection, and then we can now sell to target this EBITDA price right here. So that's exactly what I'm expecting the market to do for the week. That's if the institution go in line with that. I'm expecting the institution to go in line with that, but if they don't, then I'll come back to update you guys if the institutions decide to change what they are doing. So that's going to be the end of the video. I would have loved to go into pound US dollar to explain how that is going to play out, but you all know Euro USD and pound USD are very correlated. So what will most likely happen on pound US dollar is that you are going to get a divergence. Probably when this is running this high, then you have a lower low. You'll be getting a higher high here on Euro USD, but on pound USD you'll be getting a lower low. That is also one of the things that I look out for. It is intermarket divergence. It's very good to help you know if the institutions are really accumulating short positions. That is what I'll be looking out for on pound. If I get the divergence, that means I'll be taking the trade on euro and also on pound to the downside. That's on Wednesday, but for now we are still focusing on the bullish move that will run the highs. So let me just place the risk reward ratio. I expect to get my 1 to 3 minimum risk reward ratio before the run of the liquidity, because it's not certain the market is going to run the liquidity like I explained earlier. So I get my 1 to 3 there for today, and tomorrow we'll go again for the same thing after retracement. So we get something close to that, and then but for the second trade we are definitely going to target the liquidity run, because that's what we expect. So we can have our take profit level above this level. So that is what I'm expecting the market to do for the first intra-week contract. If it should do that and I check what the institutional order is for this range and it confirms the sell, then this is exactly what the market will do for the second intra-week contract within this calendar week. This is going to be the end of the video. I hope to make more of this kind of videos, and probably on Wednesday I'll come back to update you guys after the end of the first intra-week contract, so that we can see if the institutions confirm the sell or they want to push the price to this next IBDA price. And if that is what happened, then I'll update you on how the next game plan is going to be and how we are going to take advantage of that. If you really enjoyed this video, you should give it a thumbs up right now, like the video, share it to help others and to help build the community. If you are here to subscribe to the channel, do it right now. Just smash the subscribe button, turn on your post notifications so that you don't miss out when we upload our videos. I'll be putting out more educational content because there are still some concepts I'll be applying on this channel that is yet to be taught, and if I use it, you'll definitely be confused as to what I am doing. I'll see you guys on the next video. Happy trading and have a great day.